Good afternoon, everybody. Today is Monday, the 20th of June, 2011, and Realtick is bringing you this video here. Realtick is the software that I use to do the analysis on, as well as do all my trades. There's a lot more than what I show to this product, and I would encourage you to check them out. If we take a look at the 1 minute chart of the SPY today, it was a bullish-looking session, and we did remain above the volume-weighted average price. So tested it here late in the afternoon as well, and then we were able to bounce. But once you start backing it up to any larger time frames, it's still really unconvincing. We have a 10-minute time frame we're looking at here, and we can see that the resistance that was forming last week near the 128 level continued to hold this market back, and we have the declining 5-day moving average right in that area as well. You could say on a 10-minute chart that the market's making this little inverted head and shoulders pattern, but when you look at, again, you just back it up a little bit further, there's really not a whole lot to be encouraged about still. We're stuck in a tough downtrend here on the daily time frame. We still haven't come down and tested what I think are two important levels, which are the March lows and the 200-day moving average. And then when you look at the volume today, only price pays, but the volume was really unconvincing as well. Now, that doesn't mean a rally cannot, or a bounce, a short squeeze bounce couldn't emerge from a low volume type of market environment. You get it over 128, it holds for maybe a half hour or so, then perhaps you're going to start to see some shorts looking to cover a little bit more aggressively, and that'll just bring in some sidelined cash from people who have been really itching for any sign of life to the upside to get long. And if that's the case, let's hope we don't get a gap, and at least there's an opportunity to trade it. But going back again to the daily time frame, we're not in a bullish market environment right here. We still have that 200-day moving average underneath us and these prior March lows. They haven't been dealt with. Typically, we're going to have to at least touch to undercut these two key areas before the market can really heal, and then putting a meaningful rally that can hold more than maybe a day or two. So still really tough to trust. We did have better breadth today. 2016 stocks advancing, 980 decliners, so 2-to-1 positive, but that's just for one day. The market has spent a little bit more time just kind of searching for support in here, and that's why we're getting a 5-day moving average to flatten out, but the momentum isn't there yet. So hold off on trying to put much money to work on any long side stocks right now until we get better confirmation. Again, look at the volume here in the Qs today. Really anemic. I mean, Friday was options expiration day, but really light volume. The Nasdaq, as we know, did undercut the March lows and has been closing underneath that 200-day moving average, but that's not a good reason to buy either. We look at this, it's still below the declining 5-day moving average. Taking a look out, just an important near-term level. Last week we saw 54.50 as support and then some resistance here. So that 54.50 level is still an area that will be important. Getting up to there, we get a 50-cent bounce, but that's really going to be a key level to keep an eye on. I think Tuesday, maybe even Wednesday. Just because we have what looks like a higher low doesn't mean we have upward momentum. The Russell 2000 was up also today. You look at the 30-minute time frame here, it's turning more sideways. The bigger $79.60 level is still just ahead. We've got an intermediate term level that we're basically at 79 right here as well. So we've got all kinds of areas that should continue to offer resistance. We've got declining moving averages, and you look in here, typically a sideways attempt at a recovery or consolidation is generally going to resolve itself in the direction of the trend, and the trend is lower here obviously, but when we look at the Russell 2000, we're at this big level in here too. So there's just a lot of reason to not be bullish, and there's a lot of reason to think can we hold in here? That's the mystery, but I just wouldn't put much trust into any long side candidates here. It's just still a very ugly looking market, no matter really pretty much what time frame you look at. There's going to be heavy levels of potential resistance, and we're reaching that zone right here in the Russell 2000. So above 79.60, maybe we could get a 1 to 2 day bounce. Maybe we get up towards that 20-day moving average, but just remains very unconvincing. The semiconductors broke some support, or broke below that March low. They've been closing here the last couple days below the 200-day moving average, and very low volume, kind of everyone on the sidelines waiting for somebody else to make a move. And you could look at the phrase, never sell short a dull market, but don't buy a dull market in a downtrend either. I think is just as important, if not more important. The financials were down another penny today. Greece, continues to be an area of large uncertainty, and that's going to weigh on that sector. And we've got just a bunch of choppy action here. So the financials just kind of look like they're just comatose here maybe. The Russell retail rather is bouncing a little bit from that 200-day moving average, and I wouldn't trust it still. It's just difficult to trust any long side stuff in here. But we did get above that 106 level here, 106.20 briefly today. We're still below. We've got a rising 5-day moving average. Just too many mixed messages to really hold on to any of these indexes. There's still some stock by stock individual setups, but even there it remains very unconvincing what to do, and the message the market is relaying to us continues to be that we should be playing a strong defense.